Oh, we're live. Okay, cool. So it's really helpful to remember that when we're doing higher time frame analysis, especially on the daily, the reason that we start with the higher time frame first in that top-down methodology is because as soon as you get a glance at the bigger picture, then you can start to take smaller time frame scalps in the structure. So for example, like in the daily structure here, we have the top of the range and the bottom. And so sells at the top were very obvious. We had the 88.6 right here, massive sell-off to the 38. Then we had a retest, massive sell-off to the 61. Now, because of this higher low structure, I was telling you guys that we're either going to get a clean break out of this range. That's typically what happens when there's a wedge like this. Or what'll happen is the market will shoot out of the wedge, kind of fake everybody out who was looking for longs, crash down into the lower bounds of the range, and then continue to the upside. But I found the range and then I started to find micro ranges. So on the 4 hour, we had the high and the low right here. Okay, because we already completed this impulse. Then we had a correction, and then we had the next impulse, right? And correction. And so like the reason that now it's flipped is because we can see that higher lows are formed. So this was the impulse, this was the correction, impulse, correction, impulse, correction. And so I had found an even smaller range on the 1 hour where we had a SFT, stands for smaller time frame. So we had a smaller time frame buy right here. This is 88.6 for members, just like inside this range. And then the sell zone was the 88.6 double top from this higher range. Oh, my bad. I did a little quick before and after here. So actually, we can hop on the actual chart here. So the sell zone, we ended up selling all the way down to almost TP2. And that smaller time frame buy definitely played out perfectly. When I had called it out the first time, the smaller time frame buy was sitting at, so there was one of them at 25,259. That was this one right here. So we did end up getting a beautiful buy rejection. And then we got a retest of that sell zone, dropped all the way down. And so then for members, what I did was I basically just dragged my fib down from the Model 1, this one, to a Model 2 right here. And it was perfect 88.6. Ended up taking those longs. That was the trade that I took last week on Wednesday. All right. Now, from this 1 hour impulse, we're back at 88.6. So I'm looking for another short opportunity. Only issue is the market started to short off, or the market started to sell off before the market opened. Okay, so what I would be looking for is here to here is so we already had this impulsive move to the downside, and then we just had this 88 retest. Members, you guys can see the heartbeat right here. And so what I would be looking for is a retest back for the head and shoulders and a sell to the downside. You can also use, if you have your 88.6 fib drawn correctly, what you can do is you can find the 786, and that'll be a pretty good retest zone. Okay, I'll zoom in just a little bit. You guys can see the 7.8 retest lines up with the head and shoulders. So that'll be a good retest level. On CFDs, that price level is 555. I'm looking at the black bull chart here. And if I was to do this on futures, just so we can get the price for the trade of eight, let me move this. That'll be 696. Let's call it 700 just to make it easy. So what I'm expecting is we go down to the smaller time frames, is a retracement up during this Tokyo session, and then probably during London, we get a retest of the 700 area for a sell back down. Now I'm expecting this thing to come all the way back down to the 500 range. So we're looking at about a 200 point move here. Pretty straightforward. And then we'll see later in the week. No, I don't have any of these charts clean. I've annotated all these. Okay. But we'll see later in the week if we get stuck at this range right here. This is on the daily. So we have this daily inverted head and shoulders. Then the market will very likely create a double bottom and continue to the upside. We've already retested this level twice, this sell zone twice. So members, you guys know the next time we get up to this level, it's going to be the break. I will short the double top for a scalp, but more than likely this thing will continue to the upside. Okay? Does that make sense? Short term, looking for these sells at the head and shoulders. And then long term, once we get stuck at this higher time frame TP1, which is lines up with the bottom of this gap, lines up with the previous resistance level, resistance, 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 turn support. And I would like to see it get tested as support again. Okay. Pretty straightforward stuff. Any currencies you guys want me to cover, or any instruments you guys want me to cover, just let me know in the chats. Dollar still ranging, still has not broken back into the weekly range, right? Just to remember, 100 to 108 is the weekly range for the dollar, for the DXY. But now we've formed a new range. We have a low sitting at 96, and we have a high at 100, which brings me to the biggest news event that we have this week, which is FOMC. So it's the first Fed rate decision of the year. We're going to see if the pressure from Trump to fire Powell is going to basically get in his head and pressure him to drop rates, or if he's going to stay consistent with his principled kind of strategy and keep rates as high as he can for now. That way, if we go into a recession or we get into like kind of some speed bumps here, he has some ammo to be able to help the economy. Good stuff. He said gold. Got you. I'll do gold in just a second. So President Trump is speaking where? Probably Davos? Nope, in Iowa. Okay, we'll see. Yeah, really, it's the FOMC meeting is the number one priority. We have core PPI, the producer price index coming out, more an inflation measure for producers. So we'll kind of cross that bridge when we get there, but Fed meeting is the top priority here. So obviously we'll stream that live. My predictions, to be honest, is that Powell will cave to the pressure. He might just keep rates the same, and then in his speech, in his language, promise future cuts this year. That way, he still gives the markets what they want, which is a optimistic boost, and then still gives Trump what he wants, which is the promise of giving him what he wants later without actually doing it. Okay. Now, the importance of the dollar is that all the assets that we've been seeing climb, including gold, stocks, mostly NAS, and crypto. A lot of the volatility that we've been seeing in all three of these markets, the constant up and downs, has been directly related to the value of the dollar. So Trump's policy is to continue to crash the dollar. Number one, this will help asset prices, which will give all of his donors and all of sort of like anyone who owns assets in this country, which are the ones who are supporting his campaigns and kind of donating and giving kind of super PAC money, etc. They're all invested in these asset classes, and I guess we'll throw real estate in here as well. And so, if you can think about it, it's just like any other currency cross. Like whenever we look at, let's say, gold, we look at gold versus USD, which is what we're about to do, or we'll look at NAS versus the US dollar, or we'll look at BTC versus USD. Now we can go look at the actual asset itself, but most of the time when we're looking at these pairs, it's priced in US dollars. And so this is like simple fractions in case you guys didn't go to elementary school. Here's how fractions work. If you have a numerator, let's say gold is at 4,000. So then the numerator would be a dollar, which would be $1. Okay. So then there's two ways that the value of this can change is that if the value of a dollar goes down, the value of a dollar goes to 0.8. I didn't think this through at all. That I don't even know. I can't even see. I was clowning you guys for not going to school. Fuck, this is going to be really bad. Let's just assume it's 4,200. Okay. Oh, wait, my bad. So we have the same $4,000. And if the value of the dollar goes down, then this $4,000 will now equal, I don't know, somebody help me do math. There's days like this where I'm just praying that my dad's not watching the stream. Like getting some serious trouble here. Nobody? Nobody can do fractions? All right. This is what the internet is for. It would do 4,000 divided by 0.8. It's 5,000. Okay, I was way off. Okay, so this is how assets climb in value. So at first, a $4,000 asset, let's say you bought like a new motorbike or something, and at the current price that you bought it at a dollar, it's worth $4,000. Okay, let's say it's a very rare motorbike, it's going to go up in price. And then when the value of the dollar drops by 20%, this is a very significant drop, but let's just assume this is for the sake of example, when the value of the dollar drops, now that bike hasn't changed at all, hasn't become more valuable, but is now worth more in terms of dollars. So if you bought it for four and sold it for five, you made profit. Okay, so there's two ways that the value of something can climb. Gold can either become more valuable just because it's more rare, it's more exclusive, it's harder to mine out of the ground. Maybe there's a few mines around the world that shut down because of some law or whatever. So now the scarcity of the asset can drive the price up. But at the same time, the supply of the quoted currency can also have that same effect. Does that make sense? So there's any lesson from here is that rich people buy assets for a reason. It's because the more they print dollars, the value of the dollars goes down. And the more the value of the dollars go down, the more that your assets are worth. Okay? But if you were to value this $4,000, it would be this times this. Okay, so then your actual, like if you were to save cash, now it would be worth, fuck, I really should just do this math over here. 3,200. So if you wanted to just hold cash in your bank account or under your mattress or whatever, then it would be worth 3,200. Well, what does that mean? If even though I have $4,000 in bills, you have the purchasing power of 3,200. It can only buy you $3,200 worth of stuff now, not $4,000 worth of stuff. Okay? So holding assets ensures that your value goes up and your net worth goes up. Holding cash ensures that your net worth goes down over time as the value of the currency continues to get crushed. Okay, so that little, finance lesson right there is to explain that Donald Trump's strategy for the United States is to lower the value of the dollar. This does two things: increases the value of the assets. That's the example that we just went over. And the second thing is it reduces the value slash price of the debt. Because yes, you might still owe $300 billion a month or whatever ridiculousness that we're paying a month, or I think it's $400 billion a year that we're paying in interest expense, which is damn near insane. By 2030, it's estimated that the interest that we pay on the national debt, which is like, imagine just the interest on your credit card, not the actual bill, just the interest, is more than you make a month. So for the United States, we will be incurring a higher interest expense on an annual basis by 2030 than we bring in tax revenue. It's going to be $1 trillion plus. Okay, so you can actually inflate the debt away by overprinting your currency. And then basically, yes, you still have to pay $400 billion a year, but that's really only worth $200 billion to you now. A little cheat code. But if you abuse that system, you become Japan, which is what they're doing now in order to save their bond market, overprint the currency, inflate away the debt. Not a good strategy. It ensures the collapse of your currency over time. But America has the benefit of being the world's reserve currency, so it will die last. So we can basically run the same playbook. The rest of the world will also try to run this playbook. We will survive it. They probably won't. Anyways, we're getting back down to the lows on the DXY. And so we're expecting a little bit of a retracement, and then I'm expecting a bit of a crash. So, French, just to answer your question about the gold should probably be doing the opposite, which is a drop before it continues up. So now I'm going to switch over to gold and see if this prediction is correct. We made a prediction just based on currency correlations. And let's see if it holds true. This thing is climbing. Oh my God. So this is very reminiscent of Nasdaq back in 2022 and 2023. If you guys remember, we keep telling ourselves there's no way the market's going to keep going up, and lo and behold, it will. It will make, by the way, 88.6 retests along the way. From right here, Model 2, 88.6 retest along the way. And so whenever the market establishes these short-term support segments, what you'll want to do is you want to mark off that support and you want to mark off the current range. You'll either have a Model 1, 2, or 3. Okay, and every time the market starts to climb and we have a new support, we just draw that out. French, is this making sense? So we have a gap, it kind of throws people off. Wherever the high establishes itself, which will usually be in some form of a double top here. So you'll see 1 and then 88.6, right? M's. So whenever the market is done doing this current climb, it will likely form some kind of double top. So you have to wait for that first. Okay, then you mark that off. Then you draw the fib. Get rid of the middle fibs just just for the meantime. And then what you'll do, French, is just draw up your long position, and you will not want to trade against this trend no matter what, unless the higher time frames start to flip. Make sense? So that'll be about 944. I'm looking at the Oanda chart here. But I mean, I don't really know where the end of this move is going to be, but I can find out by using my fib, finding my extension levels. Okay, maybe a little bit higher, -61. I mean, it might be all the way up here at the 88, the -88 extension. But that's just like all guesswork. This is just for fun. But let's just assume that this is where it's going to be. Since we don't have any historical data on the left, you just have to use your fib sequences in order to kind of find that future price. Okay, cool. And that's that. It's really that easy. All right, there's 2 trades. Once it forms the high, it's going to come down, start to make it look like it's going to flip back up again. Oh, hell no. 88, first trade, dip down, scale in. And then once it pops, retest of the 78. These are your 2 best friends. The only 2 trades, 1, 2, and 3. I said the only 2 trades. The only 3 trades. When it first hits, when it dips under for when you're in drawdown, and retest 78. Make sense? It doesn't get easier than that. All right. Can you possibly show a good example of an Elliott wave? So Elliott waves typically go in threes and fives. So you have a starting point, which is usually what we call the accumulation zone, a markup, ISO 0, starting point, then 1, 2, 3, 4, and 5. There's 2, 3, 4. Now you know it's an Elliott wave because there's rules that need to be followed. So the 4th wave needs to be higher than the wave 1. And wave 5 needs to close above wave 3. Right? So there are certain rules here where it has to be higher, high, higher, low. So typically you have an accumulation markup, a reaccumulation markup, reaccumulation distribution, and it comes all the way back down. And then it forms a higher low, and then we start this whole cycle again. So a good example of an Elliott wave here is, let me see if I can actually find the bottom of this move, where it started. Okay. So we have a little bit of sideways action here. So this could actually be our starting point. We'll verify this in just a second. Okay. So this would be, where are we at with it? Elliott impulse wave. Beautiful. So this would be your starting point. That's the 0. You'd have 1, 2, 3, 4, and then 5. 5 will be somewhere up here, and we'd be able to use our fibs for this, actually. Extension level 88.6. Stop playing with me. Okay. So the example of the Elliott wave is once we've hit, so right now we're still in the middle of this move. So we've had our accumulation range right here. This is where the move started. It was accumulating orders, sells, and buys before it swiped out. It cleared a lot of the early buyers who had a tight stop and kicked out some of the early sellers who were starting to short all momentum and end up getting crushed. So the accumulation zone is just to drag enough buy and sell orders into the market so that they actually have the volume on the other side of the trade to be able to actually execute their orders. So then you have the first impulse and then the first correction. Then you have the next impulse, correction. These are reaccumulation zones where the market is reaccumulating orders by faking out the sellers and then swiping them up so they lose money. And then the buyers who are trying to buy a little early, they keep getting crushed on the way down. This is where we scale down and find 88.6, kind of shorter time frame moves. So then how you know the move is done, and once all 5 waves are done, and sometimes they come in threes, very rarely, and sometimes they come in sevens, but they mostly come in fives. Okay. And so once this move is done, and then you have the distribution, which is the opposite of the accumulation, which is the market sort of liquidating orders, closing trades, if you want to think about it that way. So they have to sell. If they've been buying this whole time and buying contracts and buying options and futures, they'll have to sell those contracts in order to unwind their trade. And that's where you start to see a sell move down. And so the end of an Elliott wave will usually be an XYZ correction. Okay. Oh, it's actually to the downside. My bad. It'll fake, start up here, fake down first, retest the top, and then come down for the retest. And so this is where we usually see the Model 2s, or it can come all the way back down to like the zone 4. That's a Model 2. Or if it comes down to the number 2 zone, that's a Model 1. And kind of like, this is all extra info, bro. For real, just look at this 88.6. Once the market forms a high, draw your fib, wait for that buy, then take it one step at a time. All right. All right. Put a 1 in the chat if you guys are good on this. If you guys are watching this on YouTube, congratulations. Shout out to French. You guys got a free lesson on Elliott waves, on Elliott wave theory. Which broker? Try Apex. Link in the description. Prop firm versus brokers. Just my personal opinion. What do I know? Oh yeah, I know quite a bit. All right, yo. Great to see y'all on the stream. It's 2026. It's a fresh year. You have a fresh chance to make choices. I know that trading tends to leave scars. It tends to leave you with a bad taste in terms of certain scenarios, and maybe you don't feel the confidence to get back into it and just sort of create a new plan. Is it going to work? It's going to take too long to implement a new plan. In 6 months, you're either going to have implemented a new plan and got your shit together, or you're going to be in the same place. 6 months ago, we were all somewhere, and now we're here. You're going to be somewhere in 6 months. The question is where, and that's up to you. So take some time. You can make a choice on any given day to change your life. Let that be today. Hashtag Chartaddicts. Hashtag exciting news coming for y'all. Hashtag click the links in the description. Hit subscribe. Send this to a friend. Don't be a bum. 88.6 thousand subscribers. If you know, you know. And if you don't, now you know.